Hi, good morning, everyone. I see Navjot Singh welcome you all in this two-day workshop of foreign trade policy organized by Textile Business Advisors and Archana Jain. Like in previous 2 months, we see like we have seen a very tough time. In previous 2-3 months were very tough due to this second wave of COVID, and now we see like conditions are getting better. So we hope that every one of you is getting vaccinated, but still like till the time we get the normal time back, so we should take all the precautions, because what we see that when they go for unlocking the things, people go mad, people go back to their offices, and they're all back into the crowd and everything. So but at the same time it becomes very important that this time when we are at home, so we get some spare time to learn new things. And obviously we all are learners only, we all are learning something at some point of time. So we came up with this idea of discussing about those laws or those policies on which I think very few people are known to it, or very few people are talking about it. Now this is one of the policy which is important. This is kind of industrial policy, foreign trade policy if we talk about. You see, India is a very dynamic country. India is very dynamic when it comes to diversification or when it comes to the population. Now, for regulating this big population, we need various laws, be it related to transactions, be it related to any activity. So we do have a lot of criminal acts, we do have economic laws. And after the liberalization, especially after the liberalization in early 90s, or maybe I would say in the late 90s, in 1991 or 90s, when we got to know about two keywords, globalization and liberalization, and WTO also came into picture. Now, why everything is needed, why this WTO is needed, or why this kind of a policy is needed, why there is a regulation should be there on this? That is because when a particular country, if we talk about India, we might have some competitive advantage over, like we might be having some products which are only available in India, and India is providing that products to the outside country. So it becomes very important when we talk about regulating those transactions, regulating those prices, when we talk or when we deal with multiple countries. So that was the whole idea of introducing the Foreign Trade Development and Regulation Act in 1992. And this is the main, I would say, the reason why WTO also came into picture, to regulating all the multiple countries' transactions, or this global trade, to regulate that global trade. So that's how foreign trade policy came into picture. Now, just to give you a detailed insight that about the background of this policy, I would request Archana Jain ji to initiate the session with that.
Thank you, Navjot. A very good morning to you, and a very good morning to all the participants. I hope you all are enjoying this Sunday morning, and we all are really grateful that you are here on this session on your beautiful Sunday morning. As Navjot has correctly said, so it is a policy, and every country has the importance of import and as well as export. And every country wants that, yes, their export should be accelerated and they should have lower in terms of importation, and they must having an exceeding in terms of exportation. Similarly is the case with India also, and we all know that we have one thing that is our strength, as well as we always say that yes, that is also a what should I say, the negative point of our country is the population. But as we have a huge population, so we are also having a huge number of manufacturing units. Let it be MSME, let it be a cottage industry, or let it be a small industry. And most of the industries in our countries till date are labor-oriented industries. So yes, what they have said is that they have framed the policies in such a manner so that the person who is into the manufacturing is benefited, and he should not be, again, the trader should not be having the additional advantage with respect to the manufacturer. In certain areas, they have given some restriction for the traders also. So this was the basic intent behind these policies, which is now known as foreign trade policy, which was earlier used to be known as EXIM policy. EX for your export and IM for your import. So earlier it was known as export-import policies, and now it has been renamed as foreign trade policy, or FTP in short, what we call. So this is a whole scenario, or this is a whole gambit of the benefits that the government of India is extending towards their exporters, that may be, and they have to keep in mind the World Trade Organization also, the WTO norms also. Why I'm saying so, that WTO norms has to be taken care of, because now it is a global market. We all know after 1991 of the globalization, now the market is a global market which is open to all. So in order to compete in that market, we have to be having the competitiveness in our pricing. We should have the competitiveness with respect to the quality of our products as well as the other arenas. So whenever there is a subsidy, or whenever there is a kind of price backing that is being awarded by the government of India, that has been, or government of any country for the time, for the sake of argument, we can say that, then it is always taken as that, yes, this is a side routing of pumping in the funds to your exporters so that they can compete in the global market, or they can sell their product on a lower price to the global market, and in that manner they will be damaging the local manufacturers or the local market of that particular country where they will be exporting. So that is the reason of anti-dumping, that is the reason of safeguard duties that has been imposed. And we also see that there are at times other countries are also imposing these kind of cases on us, like Mexico has this anti-dumping policy on the textile that has been rooted uh, from any other countries, from any of the ASEAN countries, which may not have the country of origin in that particular country. Similarly, Colombia has initiated this anti-dumping duty on the plywoods. Why these things are coming up? Because they say that when there is a price difference between what you are selling in your domestic market and what you are exporting in the international market, that price has to be rationalized. It should not be that, okay, you are selling this product in your domestic market at 100 rupees, but you're able to dump that product in the other country, let's say for 50 rupees, because you have many other subsidies or many other benefit scheme that has been provided by your country, so that you're exporting at a lower rate and you're able to earn the foreign convertible currency for that country. So these are the aspects that are being governed by WTO. So the WTO norms are very, very stringent, and they always take care that no of the countries should be allowed to dump anything in any of the countries. Their domestic market should not be hampered, or their domestic market should not be shattered in any manner. So this is the basic framework that has to be kept in mind when all our policies are being framed. And as our session will go on, then you will be able to understand which are the few of the incentives that has been discontinued because of these kind of issues that we are facing in the in the global market, or with respect to the WTO norms. So let's start with the basic framework of foreign trade policy. So we'll be starting with a brief understanding of what this policy is all about. We all know as of now also foreign trade policy 1520 is into existence. Why? Because last year there was a press release, and the last year 1520 policy was extended for 1 year. So the extension was up to 31st March 2021. Then further it has been extended up to 30th September 2021. So yes, we were expecting a new scheme in 2021, a new policy in 2021, but that has been yet deferred because of this 2 years pandemic situation all across the globe. So the topics that will be covered under our presentations are like the background of the foreign trade policy, the remission of duties and taxes on export product, or ROTP. Then your chapter 4, which covers with the duty exemptions or the remission schemes, status holder, that has been covered under chapter 3 of the FTP. Then TMS scheme, that is a specified scheme with respect to the agriculture produce, and that has been covered under chapter A, which has been inserted newly in this FTP policy. So India faces significant challenges in the area of trade policy. The global economic slowdown is there, increasing protectionism is there, because I have said that WTO is playing a very, very active role in all these kind of scenarios. The failed mega trade deals that have come in time to revive, and perhaps more important, its own domestic preoccupation. Our own market is having huge consumption power, and that is the reason all of the big players are ready to have investment in our country, because yes, the purchasing power or the buying capacity of an Indian population is much, much higher than whatever the high per capita income countries population may possess. So in that sense, our market is a very huge market, and that is the reason everybody is focusing on our market, let it be a consumer durable product or let it be a luxury product. Just giving for an example, a luxury car like a Rolls Royce that was launched with a preset mind, okay, this was the number of units that they are going to procure in 1 year. that was the timeline. Okay, they will be able to sell these number of units in 1 year timeline. So when they have opened the unit in India, they themselves have claimed that whatever the inventory they have in their mind for one complete year was disposed of within the first month of the launch. So this is the kind of purchasing power that we Indians have. So obviously everybody is eyeing to our market. And it is not that we are only dependent on the other countries' product only. Our own manufacturing units are also very competitive, and that is the reason we are able to export many of the items which are not very commonly exported by any other countries. And the basic example can be we are manufacturers of very fine textile, we are the manufacturers of handicrafts, we are the manufacturers of, let's say, the handmade furnitures, which other countries may not have because they don't have the strength of having huge population like we have. For India to achieve its policy object, the government and the industry, particularly the manufacturing sector, must prepare opportunities and greater engagement in an evolving multilateral trade arena. Obviously, we have to take care of all the dimensions that we are exposed of today in the global market. Indian priorities should include taking policy measures to confirm the global standard and supporting the WTO norms. And that's the reason they have to launch the multilateral negotiations also. And our policies has to be in alignment with the norms that has been set by WTO. So what is the background of this foreign trade policy? It has been said that the arguing against globalization is like arguing against the law of gravity. So we all have to accept this. And today we all are so much used to these, what should I say, global products. And also we are also looking forward that yes, our services or our products are also being produced in such a manner, or they are being rendered in such a manner that yes, we are as though we are also opening ourselves on the global market. So we cannot deny this globalization as of now. Or in the current situation, I don't think so. It is easily eradicable things in our present life scenario. So the central government and exercise of the power confirmed under Section 5 of the Foreign Trade Development and Regulation Act 1992 formulate and announce by notification in the official gazette the foreign trade policy. So it has to be formulated by the government, central government. It has to be issued or it has to be notified by a notification, that with the official gazette, and then only our foreign trade policy will come into existence. Before 2004, as I have already told, it was known as EXIM policy. Now it is known as FTP policy, and it is usually for the 5 years time period. And whatever addition or deletion has to be done, it is done in that particular policy number only. So whatever addition or deletion that has been done in the FTP policy 1520, so it will always be named as FTP 1520 only. All exports and imports made during that period shall accordingly will be governed by FTP of that particular period until and unless otherwise specified. On 1st April, India was to unveil an FTP policy 2126, but yes, because of this COVID situation, we all know it has been, the current policy only has been extended up to 30th September. The UN Economic Situation and the Prospects 21 report says that Indian economy shrank 9.6% in 2020, and that was in global effect against the global average of 4.3%. Yes, because we had the extended lockdown period, we had the complete lockdown period from the very first day in March 2020 only, when most of the countries in the world were not adapting lockdown. So that has hampered our economy in a very greater manner. And yes, we have shrank to 9.6% with comparison to the global average of 4.3%. It's projecting a 7.3 growth for India in 2021, and that we all are very hopeful that yes, we may see that growth. But again, we have seen a setback of time period in the current lockdown situation when the second wave was there. And the second wave has taken a huge toll on each and every one of us. So we have to again reframe or recalculate our projections, and accordingly, I think we will be able to achieve the same. Hopes of a turnaround rest largely on export picking up. Yes, we all know exporters expect the new policy to include initiative aimed at improving India's standing in global merchandise and service exports and to correct the deficiencies of FTP policies 1520. So whatever lacuna that was left out in 1520 should have been corrected or should be corrected in 21-26. This is our expectation, or this is the expectation of each and every exporter. So this is the way that the FTP policy has been drawn or drafted. So there is a legal framework, the journal provision. First, chapter 3rd is related to your all the schemes that are related to your exports. Then duty emission or remission schemes, then your EPCG scheme, then your chapter 6 deal with all kind of your deemed exports or all kind of the areas that has been specifically demarked or set up with respect to the deemed export provisions, or with respect to making that particular area develop, or by making a demarcation of the industrial areas or the new park areas, basically the software park areas, so that our export are also benefited in that manner. Then chapter 7 talks about your deemed export. Then 7A, as I said, that it was newly incorporated, that deals with your TMS scheme, that is only with respect to your agriculture produce. Chapter 8, quality complaints and the trade disputes, and chapter 9 deals with the definition. We have seen that, okay, the FTP is a policy. There is a particular draft. There is a particular set of all the things, inclusion, exclusion, the definition, what all the policy has in their mind, or what are the benefits, or what are the schemes that they are going to launch, and that is there in your FTP. Now comes, okay, I have decided the scheme. How I have to go for that scheme, how the exporter has to imply that scheme, or how the exporter has to apply for that scheme in his business, or how he can get the benefit. So all those procedures, all those compliance aspects that are always mentioned in your handbook of procedures and appendices and the Niryat Ayat form. So there are Ayat Niryat forms. There is a complete set of procedure that has to be followed, so that all the benefit that has been mentioned in your FTP policy can be availed by an exporter. So for the purpose of implementing the provision of FT, Foreign Trade Development and Regulation Act, the rules and the orders made there under and the provisions of FTP, the Director General of Foreign Trade, or shortly known as DGFT, by means of a public notice. Here it is a public notice, there it was a notification. Notifying the handbook of procedure the simple, transparent, and compatible procedure which are user friendly and are easy to comply with and to follow by whom? Exporter, importer, the licensing or the regional authorities, or any other authorities such as customs, etc. And we all know that now today ease of doing business has taken one step further, and most of your compliances are online. Let it be your filing of your forms, let it be filing or your SEIS application or your MEIS application, your bill of shipping bill of lading, and all those things can be easily taken care by online. So there is a minimal requirement of you leaving your office and going to the office of the concerned authorities or visiting the offices of the concerned authorities. So that is a welcoming step, and that has been taken care that yes, with the due course of time, this online system should be made more robust, so that there should be a minimal human intervention in the passage of the benefits or the schemes that has been launched to the ultimate beneficiaries. They should reach seamlessly. The procedure are contained in the following documents. So there is a handbook of procedure. There is a complete compliance procedure, complete note regarding each and every policy. What are the requirements? What are the eligibilities? What are the procedures? What are the documents that are being required? Everything has been enumerated in the handbook of procedure. Then there is an appendices where you have the meanings and all those stuff. And your Ayat Niryat form, that means the forms that are required to be filed by you, they have been given a collection of the same. Your ceon norms. Ceon norms are in relation to the manufacturing units, where they have their input-output ratio, or there has a fixed norms that has been set, so that you are able to avail the various benefits like your advance authorization for complete year or DFIA. These are the scheme where you should have the basis of your ceon norms, and that will be helpful in deciding what will be the amount of your import that is eligible to you without payment of any kind of duties or remittances. So the handbook of procedure of FTP policy were notified wide. Public notice, as I told you, it is always notified by a public notice, and this current handbook of procedure has been notified by a public notice number 01/2015-20 on 1st of April 2015. Revised handbook of procedures of FTP policy after the midterm review notified by DGFT public notice number 43/2015, and that was dated 5th of December 2017. Now I have given a small comparison between the FTP and the handbook of the procedure. So basis issued by central government, handbook is issued by the DGFT because they are taking care of the compliance aspect. The mode of issuance of FTP is notification. Here it is being notified by a public notice. The power to formulation is under FTDR Act, and here it is under FTP. So handbook of procedure cannot override your basic statute or your elementary statute, that is the FTP policy. So it is a procedural thing or a secondary legislation, I should say, and it should not be overriding your FTP policy. So for supremacy, FTP will be always be prevailing over handbook of procedure. So whenever there is some kind of ambiguity or confusion, we have to come back and we have to rely on the provision that has been illustrated or that has been written in your FTP policy. So handbook cannot override the FTP policy. So remission of duties and taxes on export products. So I'll request Navjot to carry it further so he can explain you this scheme of ROTP that has been launched. But yes, there are certain things that has to be done in this regard. So he will take you through the journey of the nitty-gritties of this scheme, what are the basic understanding of this scheme, and what are the things that has to be taken care of. Over to you, Navjot.
Thank you so much, Archana ji, for setting up, I would say, the required outset for the foreign trade policy. Let me just share my screen. So as you must be knowing about this remission of duties and taxes on exporter product, which is commonly known as ROTP. Now, this scheme is quite, I would say, the highlighted point or the hot topic in today's time. As previously, there were a lot of schemes, like be it related to MEIS or ROSCTL related to garments industry. So, but those schemes were not conformed with the WTO norms. And there was a long battle behind this. Now, let me just brief you regarding the law related to, or I would say the why they came up with this ROTP scheme. Now, if you see, there are WTO rules which somehow say that a country cannot give the export subsidies, which violates the WTO rules. But there was an exception to this when the WTO came into the picture, and they defined a criteria that if a country is having per capita gross national income below than $1,000, so then they can go ahead with the export subsidies, which are even violating the WTO rules. So this was an exception to that. If any developing country is having per capita income less than $1,000, then they can come up with the export subsidy things. But the countries who are having the per capita income more than 1,000, they were given an 8 years of time period to comply with this WTO rule. Now, India earlier was under the category in which they were having a per capita income less than $1,000. So they were allowed to do, or they were, I would say, they initially availed that exemption, or I would say the exception which was given to those countries. But in 5 years back, if we see, India crossed that mark of $1,000 of per capita gross national income, and it is not in now that exemption zone. Now, after 2015, when we crossed that mark, so it was supposed by WTO that we should be ending up, or I would say we should amend our export subsidies, or the export subsidies which are provided through foreign trade policy. But India did not do that. Even India tried to, I would say that they tried to expand the benefits which were given in the schemes like MEIS. I think more than 8,000 eligible products were included in that. Now, since India had the opportunity, see, India is being very developing country and its growth rate is not that bad. And growth rate of the GDP of India has been very good. Like if you see from the data from 1995, just due to this COVID pandemic, our growth rate have slightly decreased, but not otherwise. Now, India has, if you see, a lot of years to comply with those WTO rules because we always knew that we are going to cross that benchmark of $1,000 per capita income. But we did not do it. We waited for the time that the day we'll cross it. Then we'll see that what is needed to be done, whether these subsidies are needed to be removed or not. Now, this obviously irked a lot of countries that why India is not complying with WTO rules related to export subsidies. And that's how in 2018, US challenged our various subsidies before the WTO. And the allegations of WTO's dispute settlement panel were set up there, and the allegations were heard from the both parties. And we lost a case before the WTO. Now, though India have filed an appeal before the appellate authority of dispute settlement panel of WTO, the decision is yet to come that whether our export subsidies violate those WTO norms or what is needed to be done. But presently, just being a proactive member, Government of India have come up with a scheme which somehow comply with the WTO norms. Now, if you see last year, a Cabinet Committee of Economic Affairs, which was chaired by Prime Minister of India, they gave the approval on 30th March for introducing the scheme of ROTP. Now, this scheme is there to replace the existing scheme of MEIS and ROSCTL. I'll be telling a brief about these schemes, like what were these schemes about. But the problem is that even after introduction of the scheme, still rates are not there. They have not given us the rates. Now, what are the key benefits, or I would say the silent feature of the scheme is the GST and custom duties on input required to manufacture exported product are either exempted or refunded. Now, if you see, if we talk about exporter, so all the GST or custom duties are generally exempted or refunded if he is ultimately exporting the product. But there are certain taxes or duties, or I would say the levies, which are outside GST and which are not refunded for exports. Now, such as there can be VAT on fuel, which is used in transportation, Monday tax, duty on electricity used during the manufacturing. Now, these duties were not getting refunded in erstwhile schemes, I would say. But after this scheme, they have tried to give the reimbursement of all these taxes as well. Now, let's just cover the taxes in two parts. First is Tier 1. Tier 1 is something that the immediate supply which you get for exporting the product, it is exempted. But the Tier 2 supplies, like the taxes which were levied on Tier 1 supplies, are not getting refunded. So somehow there are few elements of taxes, even if you are exporting the product. Though we have a policy of not exporting the taxes, but still we do have some element of taxes in the supplies in any form. Now, when this scheme was introduced, there were a lot of, I would say, consultation was there with a lot of various ministries, like be it Ministry of Heavy Industries, or be it Ministry of Agriculture, be it Ministry of Commerce, and all the consultations were there just to decide those rates and the extent of benefit which is needed to be given. Now, how this scheme works, it also works on the same in the same manner of MEIS, as a percentage will be given on the FOB value of exports, which will be given as an incentive. Now, a monetary, or I would say audit system, will be implemented when the scheme will be I would say when rates will be there, when you'll be getting the actual benefit. So there will be a risk management system through which they'll be physically verifying the records of exporter, and subsequently they'll be giving the scripts, or I would say the incentive under this scheme. Now, after this scheme, what is the benefit of this scheme? All the money is going in your credit ledger account, or I would say the ledger which is maintained on the iState portal, and you can use that the ledger as a guarantee for loan. And there is a budget was also proposed for providing higher insurance covered through Export Credit Guarantee Corporation, ECGC, to increase the lending opportunity from the banks, and reduction in the turnaround time on export airports and ports to decrease delay in exports. A real-time monitoring of clearance status via digital platform will be available. So the overall, I would say the overall benefit or the purpose behind the introduction of this particular scheme was to give exporters a technological platform. Second, to comply with the WTO norms. Though informally, I just read 2-3 days back that the USTR have also raised objections on this ROTP as well. But since that's not something I would say the formal as of now, so they are objecting this scheme as well. So they were objecting our earlier scheme as well of MEIS and ROCATL, and they have an objection. They have planning to file an objection on this scheme as well. Now, how to I would say what is the process of getting this? Now, obviously, when you want to avail this benefit, you will have to declare. There are certain columns which are specified in shipping bill, that while filing the shipping bill, you will make a declaration that you want to claim the ROTP benefit. Now, once export EGM will be filed, claim will be processed by the customs. Once it will be processed, a scroll with all individual shipping bills for admissible amount would be generated and made available in the user's account at iState. After EGM, there will be a scroll generated. This is just like IGST refund, which you get on through automatic route. And after that, user can create a ROTP credit ledger under the credit ledger tab. There is a credit ledger tab on the iState portal. Now, this can be only done if your DSC is registered. There are two kinds of registrations on iState portal: normal registration and simplified registration. So you make sure that your IEC, or I would say DSC, is also registered on the iState portal. Then only you will be able to create that ROTP credit ledger account. Now, recently they have made a lot of changes in iState portal, be it related to SCMTR registration or AEO registrations. You see a lot of changes, e-Sanchit and all. So you have to see, or I would say the carefully applying all these incentives, since although there are few judgments, I would say that even if you don't avail, or I would say make declaration in the shipping bill, so afterwards few of the commissionerates do not apply, do not give you the benefit of amending that shipping bill. Like suppose if you are exporting that product outside India and you were eligible to get this benefit, but by mistake you couldn't just submit that declaration while filing shipping bill. So there is a provision in Customs Act that you can amend that shipping bill, but as there is no time limit specified in that particular section of Customs Act, but still few of the commissionerates have internally or practically, I would say, implied few of the restrictions related to time limit, or they have their own, I would say, restrictions on that, since it's at the discretion of commissioner who will be giving the benefit of that amendment. So it is it is to be needed to be, I would say, that taken care of very carefully, that you submit your claim in shipping bill and you fill all those particulars very clearly and in the manner as specified by the government. Now it will be some time, like it has been very, I would say, the long time that rates are not there. They are still in consulting form only. Like recently they were saying in February, they said that DGFT said that rates will come within 15 days. Now, a few days back, the Secretary of Commerce, Department of Commerce, said that rates are almost finalized, just that due to some implementation issues we are facing issues, so it will be out very soon. Now, what are the ineligible categories that who cannot claim these kind of schemes? So if you see SEZ, EOUs, or the exporters who are having advanced authorization license, jobbing, etc. Now these categories cannot, or I would say, kept out of the ambit of ROTP scheme. Now you see there is not even a single notification, or I would say a guideline circular is there to specify or to which carves out or which carves in the rules related to ROTP scheme. Everything is related to on press release, or maybe there are some public notices by a few of the customs authorities. So there is not a clear picture related to ROTP scheme, that how this benefit or to whom this benefit will be given. Now, to when all the ambiguities were there related to SEZ, so that SEZ division of Department of Commerce came up with a public notice or instruction that you would be when SEZ unit will be filing a shipping bill, they will be mentioning in a remarks column that shipping bill filed under ROTP scheme if applicable to SEZ unit and subject to such conditions as prescribed, including the product coverage. Now, though the government have not clearly said that this scheme will be applicable to SEZ unit, but they have said that this might be applicable to SEZ unit, so you must say that you must cover, or you must, I would say, that declare about this ROTP declaration in your shipping bill. Now, if we talk about ROTP benefit, which is there for providing the reimbursement of taxes to the exporter, it's like that if you are exporting rupees 100 of material outside India, suppose 5% rate is there. Now, what is that 5%? That 5% is something, all the duties or the taxes which were there while manufacturing that exported product. So that percentage is just a reimbursement of all those duties and levies. Now, if we talk about the ambit of keeping the advance authorization out of this whole, I would say, the scheme, or the EOU or SEZ, maybe they are kept out of the scheme. So you see those units are also not, I would say, the fully zero rated supplies or zero rated exports, since, as I stated earlier, their immediate inputs are getting exempted, not other incident of tax in the entire value chain before that immediate supply. Suppose if there is a importer, or I would say the exporter, who is having an advance authorization, who is allowed to import duty-free goods into India. Now, if he purchases few goods from indigenous market as well, now what you see is all the taxes or duties which are there to make that product. Like suppose there is a electricity duty, or I would say some other spares which you have procured indigenously through an invalidation letter. So all these products are not required to be duty free. They are duty free to the exporter only. It means that immediate inputs are being exempted, not necessarily the entire value chain. So they should understand this, that these schemes should be extended, or the benefit should be extended to these advanced authorization holder or SEZ as well, and they should take that consideration. Now, is this a bad implementation? Yes, obviously, since I mentioned it, that there is no official gazette regarding this, or there is no clarity over the coverage or procedures, and which are leading to confusions. And apart from that, when they said that the scheme will be there from 1st of Jan, so I don't think so that they did the ample, I would say, the training to the exporters or maybe the CHAs. So few of them able to file the shipping bill with the declaration. Few of them did not. So whenever the rates will be there, or I would say the scheme will be implemented, because as far as I know that I will be calling it as implemented only the day when they'll announce the rates. Now till then you are just filing that declaration in those shipping bills. Now you must be aware that this scheme is there from 1st of January, and from 1st of January these exporters are filling those declaration columns in the shipping bill, but they are not getting any scripts since rates are not there. Now, when the rates will be there, so there you see there will be a lot of exporters who were eligible under this scheme, but they couldn't file or they couldn't submit those declarations. So there are few ambiguities that like those exporters will be allowed to amend their shipping bills, or there should be some I would say advantage should be given to them that no person who is eligible should miss this claim, or I would say they should not miss that opportunity of filing this incentive. So apart from that, that MEIS benefit is also not there for 1920, or maybe the period few of getting a few of I would say the claims are pending from 1718 as well, 1819 few are not able to file for 1920 claims. So this is something which is layered now. Now everything is getting accumulated. Now ministry is saying that they are not having funds. So this whole mechanism was not properly, I would say, managed. Now let me just brief you about the ROTP scheme once again. Now earlier we were having few schemes. Now let me start from the inception that there was a WTO requirement that a country which is having per capita income less than $1,000 can be allowed to use export subsidies or export incentives to their exporters of that country. Now, if you cross that threshold, then you will have to give away all those subsidies or all those incentives. Now, this is something which is the just outline of the whole subject. Obviously, there are a few other restrictions as well related to all these schemes when we talk in a WTO perspective. Now, what happened 5 or 6 years back when in 2015, India crossed that mark of $1,000 mark. Now, what happened after that? That India was supposed to give away all these subsidies which are given to the exporters. But what India did was it extended its scope related to all these incentives. Now, what is this MEIS, SEIS? This is a mercantile scheme for exporters, wherein a percentage of FOB value of exports was given to them. Like suppose if you are exporting rice or if you are exporting any product, 2% will be given to you as an incentive. Now this was a scheme earlier, but when India was not conforming with the provisions of WTO, then US filed the objection before WTO that India is still providing these schemes, though it have crossed that mark of $1,000. Then India lost its initial battle before the WTO in the settlement panel. Then India filed a suit before appellate authorities. Now that suit is pending, but India came up with some other scheme which replaced the erstwhile scheme of MEIS and ROSCTL. ROSCTL is just like MEIS, but it is given to the exporters who are into garment industry or who are manufacturers of the garment industry. So that scheme is for them. It is just like MEIS. Provisions are also same of like MEIS, but it is for garment industry. So ROTTEP scheme they came up with, in which they will be reimbursing all the taxes and duties to the exporters. But they said that this scheme will be applicable from 1st of January. So exporters are filing or declaring necessary columns in the shipping bill related to ROTP, but till now, no rates have been specified. After a lot of announcements, after a lot of news, you see that rates are getting announced in 2 days, next week, next month, but it's still not there. And apart from that non-declaration of the rates, there are pending dues of MEIS as well. So all this becomes a deadly combination for hampering the ability of exporters, to sustain the tempo of revival in the exports. Now, apart from this, the next scheme which we are talking about, now this is a chapter 4 of FTP, which gives certain exemptions or remission schemes. Now, what was the intent, or I would say the objective behind providing these schemes was the general requirement for the prosperity of country is that exports are more than imports. Obviously, for a country, exports should be more than imports, and governments keep track on the schemes and introduce various new schemes as well to maintain the healthy balance between the two. Now you see, if we say that only exports are needed, then it would not be a very nice statement to say that. Obviously, there should be a balance between both. We need foreign currency in India through exports, and there should be, I would say, a correct leakage of the production which is in India which is needed outside India. So we need exports, we need imports, because India cannot produce everything at its own. Now, authorize these schemes, or through this chapter, they came up with few schemes in which they thought that they will be giving the benefit of duty-free import to these exporters. Now, suppose if a manufacturer in India is ultimately exporting its output outside India. So they came up with an idea, or they came up with the scheme in this FTP through chapter 4, that there should be a scheme in which if a person in India is ultimately exporting goods outside India, so if any product which is needed or to be embedded in that product, which is not available in India, but that person will be importing it from outside India. So you should give him benefit that that he should be allowed to import that item duty free. This was the intent behind this scheme. Now, after that, duty, if we talk about the features, so it will be the duty free import of inputs for exports, like upfront exemption will be there. There will be tax free domestic sourcing of inputs under the refund route, and replenishment of inputs used in export of production, or there will be remission of duty paid on inputs for export productions. So you can get the refund of unaccumulated ITC, and these are the, I would say, the features in general which are available to the exporters. But the feature which they don't have through the general laws, or I would say in custom laws, is they don't have any scheme in custom laws. For that, we needed a policy which will boost the exporters who are ultimately using some products which they procure from outside India. But ultimately, they are exporting outside India. Na? And India's policy of not exporting the taxes is also there. So that's why we needed all these schemes to boost up our exports. Now, what are the components, or what are the schemes which are available in this chapter is advance authorization, which is the key, I would say. The two schemes, advance authorization and duty-free import authorization, are the key schemes of this chapter, which is mostly availed by the manufacturer exporter. Now, apart from that, we have advance authorization for spices. There is a special advance authorization scheme for export of articles of apparel and clothing industry accessories. There is a scheme for exporter of gem and jewelry. And there is a scheme for rebate on state and central taxes and levies as notified by Ministry of Textile, which I mentioned while giving the brief about ROTP, that MEIS and ROSCTL. ROSCTL was for garment industry, which was, the scheme was notified by the Ministry of Textile but implemented by the DGFT. Now, let's come to the first scheme, which is advance authorization. Before we come to the advance authorization, there are key words which will be used in FTP. Now, what is the foremost key? I would say the keyword is, what is ceon norm? What is ceon? Now, ceon, obviously it's an analogy, and full form is standard input output norm. Under this method, norms for thousands of products falling under the different segments are prefixed. In this method, one can apply for advance authorization license under the set serial number of ceon and get the license from DGFT. Now, what is this about? Input output norms. Suppose if we talk about a certain product, that if this product is getting manufactured, this much of input is required, and if we put this much of this much of input for production, and this much of output will be there, and a certain percentage of waste will be there. So they have fixed that for manufacturing a product, this much of inputs are required. Like giving an example, if we talk about cashew industry, now they import raw cashew from outside India, and suppose they are exporting cashew kernels outside India. So at that time, what you see is when any product is coming to their factory, so this DGFT will say that if you are putting 10 cashews in your machine or in the production process, and 9 cashew kernels should be out of that machine. So this is the ceon norms. They have fixed that input output norms for getting this license. Obviously, when you want to give the benefit to the legible exporter, there will be certain guidelines, I would say, or I would say there will be stringent guidelines, because since we started with this, that India is a very diversified country. So not every person is there who is bona fide or not with that intention to get benefit, which government actually wanted to give to you. Now, apart from that, what are the self-declared norms? Now, suppose if an exporter can apply for advanced authorization license on the basis of self-declaration basis as well, when he see that export product is not in ceon norm. Ceon norms, when we talk about, it's just like an annexer which is in handbook of procedures, in which it is given, there is a list that these are the ceon norms for these products. Now, suppose your product is not listed in that, or suppose you are not satisfied with the import quantity allowed as well. So then you can go for a self-declaration method as well. Now here he will select the import items and quantity of import items has as per his requirement. Now, not every time it might happen that when you are seeing that list of ceon norms, suppose you are manufacturing that product in that, I would say in that capacity, or you are using some another machines in which you think that ceon is not, I would say, good for you, or you cannot work under that ceon, or you cannot work with that import quantity as well, as there is a more wastage over there. So you might be importing more products as well. So for that, you can go for self-declaration as well. Now, advance authorization is issued on pre-export basis to allow duty-free import or domestic sourcing of. Advance authorization basically is given for inputs which will be physically incorporated in the export product. It will be given for the fuel, oil, catalyst which is consumed or utilized in the process of production of export product. What will be the basis of advance authorization? First, as I said, that there will be notified ceon norms. Second, if the ceon is not there, you can go to the norms committee of DGFT. There is a committee which is in DGFT to which you can file an application that my product is not specified in the ceon norms, so I want to fix my ceon norm. Or maybe you are not, I would say, the happy or with the ceon which is already mentioned in that, so you can go for the revision as well. Then, as I said, that there is a self-declaration as per the paragraph 4.007 of handbook of procedures. Then there is a self-ratification scheme as well. Now, what is self-declaration and self-ratification when we talk in the advanced authorization perspective? Now, where there is a no ceon or valid ad hoc norms for an export product, and where ceon has been notified, but the exporter intends to use the additional input in the manufacturing process, the eligible exporter can apply for advanced authorization under this scheme on self-declaration and self-ratification. Now, this means whenever you do have a problem with ceon, or when you think that you will be needing some more input to product or for a manufacturing process, so then you can file for this scheme under self-declaration or self-ratification basis. Now, this is somehow related to, I would say, the brand fixation. If we talk about Section 75 of Customs Act, which speaks about the drawback. When you are importing goods from outside India and you are manufacturing, you are conducting a manufacturing process on the same, and then you are ultimately exporting that goods outside India, you will be given the benefit of drawback. Now, drawback is given on the all India rate basis. Now, after that, if you see, if your product is not listed in that, I would say, the norms or in all India rate list, then you can go for a fixation of the rate of the drawback which you should be given. Now, that that methodology is applicable, or I would say is available in this FTP as well, that when you are not happy with the ceon norm or valid ad hoc norms for the export product, then you can go to the DGFT either for giving them a specific, I would say the specific application for fixation of norms before the norms committee, or you can apply to apply for advance authorization under the self declaration or ratification basis, under which you will be giving a declaration that this much of product is there and this much of output is there, and what sort of problem you are having. Eligible applicant. Who are the eligible applicant for advance authorization? It can be applicable to manufacturer exporter who is manufacturing and who is exporting its product. It is applicable to merchant exporter as well, which is basically tied to supporting manufacturer. Now, this is applicable for pharmaceutical products as well, which are manufactured through non-infringing process. And it will be issued to the manufacturer exporter only. A few products on which the infringement is not there, that product should go through the manufacturing of through the non-infringing process. Then only you will be given the benefit of advance authorization. Now, on what products it will be given? Physical exports. If you make the physical exports, or you can export to SEZ unit, that is also counted in that. Apart from that, if you are making the intermediate supplies, not the final product, but the intermediate supplies, then also it gets covered under the scheme. Apart from that, if you are making supplies of deemed exports, we'll discuss about the deemed exports in our second session, which is to be held on next Sunday. There is a concept of deemed export as well, in which goods are not actually sent out of India, but to certain entities that it will be considered at, or it will be colored as exports. So that those are deemed exports. So that is also covered in this advance authorization. Now, this is something that you are actually doing. This is the eligibility test for you. Apart from that, if you are making supply of stores on the board of foreign going vessel or aircraft, subject to the condition that there is a specific ceon norms is specified of item supplied. Now, first, you can make the physical exports. That is I would say the prime thing which most of the exporters does. Apart from that, you can, even if you're exporting to an SEZ unit, then also you can get an advance authorization. Apart from that, if you're making the intermediate supply, then also you are getting covered in this. Deemed exports as per the FTP chapter 7, then also you are getting covered in this. Then supply of stores. Supply of stores, basically store is something which is the general products which are needed for I would say day-to-day requirements of vessel or aircraft. That can also be provided under the schemes, only subject to condition that those products are specified in ceon norms. Now, there is another concept in advance authorization, which is advance authorization for annual requirement. Now, suppose you're making a lot of products, a lot of things are there. So you have I would say, annual requirement, or for multiple products, you can go for this methodology under the scheme, in which you will say to the DGFT, or you will say to the concerned authority that this much of input is required, and these are the ceon norms for my input, and I needed this advance authorization only for this requirement. Now, this is something which is a regular in nature, that you might forecast your business that in next 1 year that I'll be making this much of input and this much of exports will be there. So you can get that advance authorization on the basis of annual requirement as well. Now, this will be applicable only for those items for which ceon norms is there. What is the benefit between, or I would say, what is the difference if you see between the annual requirement scheme or the normal advance authorization? Is under normal authorization, you go for product, that this product is mentioned in ceon norm, and you apply for the advance authorization. But under the annual requirement, there might be a multiple ceon, that your product is like that you need multiple authorizations. So for that, you can say that this product I'm manufacturing and there are 20 items which are needed, which is to be imported outside India. And these are the ceon norms for that. And I need an advance authorization for this annual requirement. So you can get that. Sorry. There are few requirements for this, that exporters having past export performance, at least during the preceding 2 financial years, shall be entitled for advance authorization for an annual requirement. Apart from that, entitlement in terms of CIF value, that there is a threshold of entitlement as well in this annual requirement, which is entitlement in terms of CIF value of import shall be up to 300% of the FOB value of physical exports. This is specific scheme under the advance authorization only, and the entitlement is also fixed, that entitlement in terms of CIF value of imports shall be up to 300% of FOB value of physical exports or FOR value of deemed exports during the preceding financial year, or rupees 1 crore, whichever is higher. So they have put some restriction on the entitlement as well under this particular authorization. Now, apart from that, what documents are needed when you apply for advance authorization? Now, since everything is online, DGFT have also improved their portal and have included various facilities on their portal. So every application is needed to be filed online. They are slowly moving to the complete digitalization of the process, which is there on the DGFT. Now, what you need is you need DGFT DSC. There is specific class of digital signature for DGFT portal. Apart from that, you need a copy of IEC, application form of ANF 4A, copy of SSI, IEM and MSME might be required. And if you are having export house certificate, and a copy of valid RCMC registration, basically registration cum member certificate. It is needed because it is a proof that you are an exporter or you are a member of certain export council, and a copy of GST certificate. So these information is required to file application. Now, if there is a eligibility, there is an ineligibility as well under this scheme. Now, for these items, I would say these are ineligible for advance authorization for annual requirement. Like if any product, there is a list which is given in the appendix 4J of this FTP, that these inputs, if are mentioned in this annexer, there is a list, then you cannot avail the advance authorization for annual requirement. Apart from that, if your ceon norms are ad hoc norms, they are not fixed, they are ad hoc norms, then also you cannot apply. And there might be some other restrictions as well through the FTP. Now, what is the validity of this authorization? Obviously, if you're getting the benefit of duty-free imports and you're getting a license to do that, so there must be a validity for that. The validity is generally for 12 months. And suppose if you need it for a next, I would say, if you see that you need it for more time as well, so you can go for a revalidation for 6 months. And apart from that, even if you think that you still need revalidation, you can go again to them. So there are 2-time validation which is given to you. Apart from that, there is a time limit to completing the export obligation. Now, if they are giving you the benefit of duty-free import, so there is a condition on time limit of completing the export obligation as well. Now, what do you mean by the export obligation? This license was issued to you on a condition that this much of duty-free import will be given to you. Suppose you saved a duty of 1 crore from the duty-free imports. Now, against that, there is a criteria or there is a limit of exports that you will have to fulfill under this scheme, and the time limit to fulfill that export obligation against that advance authorization license is 18 months. Now, the time limit for export obligation fulfillment under the advance authorization shall commence. Now, when this time limit will start, it will commence from the date of issue of authorization, or there might be some other date as well if it is specified on that license. Now, can you source inputs domestically as well? Yes. The holder of advance authorization or DFIA, they can procure inputs from indigenous supplier. They can procure goods from state trading enterprises, EOUs, EHTP, BTPs, STP in lieu of direct import. Apart from direct imports, you can import from these authorities as well. That will also be eligible, I would say, for advance authorization. You will not be declared as a, I would say, it will not invalidate your license. And such procurement can be against advance release order, ARO, or invalidation letter as well. Now, what will be the currency for realization of export of proceeds? Now, export proceeds shall be realized in freely convertible currency except otherwise specified. Now, obviously, it will be in a foreign currency. If we talk about foreign trade policy, so there is a word foreign. So everything should be in a foreign convertible currency. Now, they have mentioned the word of freely convertible currency, the currency which can be converted freely without any restriction, or it can be in any other form if it is specified in the FTP. Now, in this, export to SEZ also will be considered as export obligation. Now, what will be the payment mode in that? Even if that payment mode in the rupee, then also it will be allowed. Like if you are exporting outside India, for that you need freely convertible currency for export realization. But for making exports to SEZ, you can do that in a Indian rupees as well. And then there is a facility to enhance or reduce the value of authorization as well. Now you can file an application for enhancement in CIF or FOB value of authorization, or reduction in the value of authorization, or EOP extension, or revalidation of authorization. Suppose you need any sort of amendment related to value of CIF or EOP, or you need some extension as well in export obligation fulfillment, or you need revalidation. All these applications can be filed online in form ANF4D, which will be submitted in concerned your regional office of DGFT, and they will check all the, if all documents will be in order, they will provide you the necessary amendment. Now there is a concept of clubbing of authorization as well in the advance authorization. Now the facility of clubbing shall be available for advance authorization for annual requirement. This will be only applicable to those people who have availed the facility of advance authorization for annual requirement, not on a product to product basis. The request for clubbing you will be making in ANF4C, which will be submitted again on the online portal. Now only such authorization shall be clubbed which have been issued within 18 months from the date of issue of earliest authorization that is sought to be clubbed. Whether such authorization are valid or not. Now this is further subject to the condition that upon clubbing, only imports made within the 30 months from the date of issue of earliest authorization shall be considered. Import made beyond 30 months of the earliest authorization shall be regularized as per procedure. So there is a time window that only authorization which are issued within 18 months. Suppose you are, if we are talking about today, and authorization in previous 18 months, if any issued, only those will be clubbed, whether that authorization have become valid or not. And apart from that, there is a clubbing condition. There is a 30 months condition as well is there. Now, what is the intention behind this is, now suppose you had 3-4 authorization and you could not able to fulfill that export obligation which was you were required to fulfill through that. Now for that you can go for a clubbing of various authorizations. Now, clubbing shall be permitted, as I said, when there is a shortfall in fulfillment of export obligation occurred in the first authorization, and there is an excess export in subsequent authorization. Suppose you took advance authorization in 1920, and then you could not fulfill the export obligation. But in subsequent year, you were able to manufacture a lot of goods and you exported those goods outside India. So there is a shortfall in first year, and in second year when you had another authorization, then you had excess exports. So you can go to DGFT that there should be clubbing of both the authorization. Like suppose as an example you can go for 1920 and 2021. Suppose in 1920 you had a shortfall of export obligation. Like if you were supposed to export 10 crore of goods outside India, you did only 5 crore. Now in next year you did the exports of 15 crores. So you can go to the DGFT and you can say that, can you please club these two authorizations, as the whole idea of exports or boosting the exports is fulfilled, but only some procedural things are not there. Like there might be due to many reasons. So you can go for clubbing as well. Now the main condition to this is, this condition may not be insisted when the validity period for import of authorization run concurrently and import made in the subsequent authorization falls within the validity period of first authorization, and such import made within the validity period of first authorization are on pro rata equal or in excess to extent of exports made in first authorization. Suppose if there are two authorizations you are having at the same time, then this clubbing cannot happen. This clubbing can only be permitted at that time when you had a shortfall in previous authorization and you are having an excess export in subsequent authorization. So if both things are on concurrent basis, like at the same time, if you are having 2 or 3 authorizations, then that clubbing cannot happen. Now, subsequent authorization issued after the expiry of validity of first authorization shall not be allowed to be clubbed. Now there was a time limit in which you will be applying for clubbing. So suppose your earlier authorization got expired, the validity of first authorization got expired, then it will not be allowed to be clubbed with this subsequent authorization. Now, what sort of duties, what type of duty will be exempted in advance authorization? The basic custom duty, the additional custom duty, the social welfare charge, anti-dumping, countervailing duty, safeguard duty, IGST or compensation cess. All these will be exempted if you are having a valid advance authorization license. Apart from that, there is an actual user condition for advance authorization. Like if you are holding, if a person A is holding advance authorization license, then only he can import such goods. It is not a transferable license. Now, if advance authorization will have an option to dispose of products manufactured out of the duty-free input once the export obligation is completed. Now, you are only allowed to dispose of the products once your export obligation is completed. First, you will have to focus on your export obligation. Then only you can use a few of the goods which are manufactured out of those duty-free imports. Only idea behind this, they just don't want to give the priority on domestic supply, which is made from the goods on which you have availed this benefit. They just don't want to give that. And that's the reason, if you see in IGST refund, if we talk about rule 9610 in CGST rules, there is a restriction that if an advance authorization holder have availed the exemption of BCD, cannot be allowed, or sorry, he have availed the benefit of BCD and IGST exemption, he cannot go for automatic route of refund. Because if he will go to the automatic route of refund, then he will be given the refund of IGST portion on the domestic supplies, since that is the only IGST he will be having in credit ledger. So the whole idea behind these schemes is they do not want you to avail the benefit of this authorization on your domestic supplies. Now, the waste or scrap which is arising out of manufacturing process as allowed can be disposed of on the payment of applicable duty. Apart from that, there are import or export of items that are on prohibited or restricted or STE lists. Suppose no export or imports of prohibited items shall be allowed under advance authorization. There is a list which is given in the policy and handbook of procedures that this is the list that these items are prohibited items. Now you cannot allow to import or export such items under the advance authorization, or first of all, you will not be given the advance authorization for that. And subsequently, if that product falls under that list, so you cannot avail the benefit of advance authorization for that particular product. Now, items reserved, which are items reserved for import by state trading enterprises. Now, state trading enterprises are basically the governmental or non-governmental authorities in India, which somehow are having authorization from WTO. So if the items of imports are authorized to be imported by only those entities, then also you cannot avail the benefit of advance authorization. And even if you want to avail the benefit of advance authorization again for that item, so you will have to obtain a NOC from that concerned STE. Suppose there is a state trading enterprise in Delhi and who is authorized to import certain category of goods, and you also want that goods to be imported under duty-free category. So you can still get that, but if you get a no objection certificate from that concerned STE. Apart from that, import of restricted item is allowed. There is a difference between prohibited and restricted. So restricted items are allowed, but that is also with specific approval of DGFT. Now there is a condition of minimum value addition as well in the advance authorization. Now, what do you mean by minimal value addition? That what you have imported from outside India, suppose you have imported some inputs in outside India, and there is no value addition when you export. You are exporting on heavy discounts, or you are doing like that. So that cannot be there. There is a minimum value addition of 15% will be there on exports which you will be making. Apart from that, there are few products in which that value addition can be less than 15%. Those are mentioned in the appendix 4D. In the case of tea, if we talk about tea, the minimum value addition will be 50%. And in the DFIA scheme, which we'll be discussing after this advance authorization, the minimum value addition will be of 20%. Now, there is another scheme apart from this advance authorization, which is just like advance authorization, but it is applicable only for export of articles of apparel and clothing accessories. They are also allowed to avail the benefit. Now, under this scheme, duty-free imports of relevant fabrics will be there, including interlining as input is allowed. No other input or packing material, fuel, oil, catalyst shall be allowed. Like in advance authorization, you saw that they allowed the benefit of oil, fuel, and catalyst, but in this scheme, this is not allowed. They are only allowed to import duty-free the relevant fabric, which is needed to manufacture. Now, for non-fabric inputs, obviously, there will be all industry rate of duty drawback, which they can claim, but there is a limit for that, which is specified in the scheme, that value of non-fabric input used on which benefit of drawback is claimed or intended to be claimed shall be equal to 22% of the FOB value of export realized. So there is a condition on this case. Now, what other conditions are there? Authorization shall be issued only based on ceon norms or prior fixation of norms by norms committee. If you are having ceon, you can go for that. If you're not, you will have to get your ceon norms fixed by the norms committee. Fabric imported shall be non-transferable even after the completion of export obligation. Unlike the normal scheme of advance authorization, where you are allowed to dispose of those items after the completion of export obligation, but that condition is not applicable here. You cannot even transfer after the completion of export obligation. Then fabric imported shall be subject to pre-import condition, and it shall be physically incorporated in the export product. Only physical export shall fulfill the export obligation. Deemed exports are not allowed. Invalidation of authorization shall not be permitted. So you cannot, I would say, procure the goods from domestic market. You cannot supply it to the domestic market. So all you can just do is you can import that fabric, you can manufacture your goods or garments, and you can export it. That's the only thing which is allowed in this. Now, apart from advanced authorization, there is another scheme of duty-free import authorization scheme. Now, under this scheme, which is issued on a post-export basis, suppose you have fulfilled the condition of exports, then also you can go for the scheme. It is allowed to duty-free import of inputs, oil, catalyst, which is consumed or utilized in the process of production of export product. Now, what would be the eligibility? Products for which ceon norms have been notified, only those products are eligible, and no benefit of this scheme will be issued if your input is subject to pre-import condition. If there is a pre-import condition which is given on the inputs, or when your ceon prescribes actual user condition, or there is a appendix J which prescribe a pre-import condition for inputs. Like if your product is, or if your input is subject to pre-import conditions, or there is an actual user condition which is prescribed in ceon norms, then you cannot avail the benefit of DFIA. Now, if you want to see that your product is under the pre-import condition, you can see the appendix 4J for that. Now, duties, which duties will be exempted? Now, unlike advanced authorization, only BCD will be exempted in this scheme. They are not allowed to even the benefit of IGST as well. Now, is this license will be transferable? Yes. The applicant shall file an online application to the regional authority concerned for generation of file number. So we'll discuss that process in detail in subsequent PPT, subsequent slide. Now, what will be the procedure? I'm just giving you the brief outline of the procedure. Now, suppose you file an online application in ANF 4A. No physical application is required. Now, apart from that, if your ceon norms are not fixed, you will have to get it fixed before you file the application. And you can go for a clubbing as well in this scheme as well. And the form is same for ANF 4C. And once you complete all the export and imports, now the authorization will submit a ANF 4F for the redemption certificate. Like it will be the export obligation discharge certificate that yes, I availed this scheme. I did my export obligations as specified in that scheme. Now I should be allowed a redemption certificate. Redemption certificate is a proof that you complied with all the conditions of that particular scheme. Now the detailed process of applying under the scheme will be, step 1 will be the applicant has to check whether exported item is applicable for DFIA in ceon or not. Then if an export item is eligible under ceon norm, then applicant will be filing online application on DGFT portal. After filing an application, he will be allotted a file number. Export should be done within 12 months from the date of issuing of file number. Now that export period of the period for doing the export is 12 months. The applicant has to mention the generated file number. Now he will have to mention that file number on every document, be it shipping bill, tax invoice, bill of export. After completion of export obligation, applicant has to apply for transferable DFIA license. Now the transferability or the right to transfer license comes into the picture only when the export obligation is completed. The applicant then has to submit relevant documents like shipping bill, EBRC, tax, invoice, etc. to concerned DGFT regional office. Now, DGFT regional office will be checking submitted documents. And if the documents are clear, the DGFT will be issuing the transferable DFI license. So this whole process of DFIA is not like the advanced authorization. In advanced authorization, you get the authorization and then you do the export obligation. In this, you file the application, you get the file number. Then after the completion of application of export obligation, you get the right of that transferable DFI license. Then you can apply for that. So this whole process is, I would say, in a contrast with the advanced authorization process. Now the key points to ponder for the DFIA license scheme is manufacturer exporter as well merchant exporter are eligible to apply for DFIA license. Merchant exporter can also apply for DFI license. The only condition is merchant exporter is required to mention the name and address of the supporting manufacturer in all the export documents like shipping bill, bill of export, tax invoice, as specified under the GST rule. Now even if the merchant exporter is applying for the scheme, he will have to mention all these documents, or I would say he will have to mention the detail of manufacturer on the shipping bills and bill of export and tax invoice. DFIA can be issued post-export basis. Obviously, when you fulfill that export obligation, then also you can apply for DFIA. Minimum value addition which is prescribed is 20%. Now there is an Appendix 4C which gives a detail of items on which the higher value addition should be there. Now export under duty-free import authorization should be made from single port. These are the certain conditions which are embedded through with this particular scheme. Now there are some another miscellaneous provisions if we talk about spices. Now duty-free import of spices permitted only for crushing, grinding, sterilization or manufacture of oils. Now authorization shall not be available simply for cleaning, grading or repacking. If you are crushing, grinding or sterilizing the spices, then only you will be given the benefit of the scheme. Otherwise, if you are doing only cleaning, grading or repacking activity, then it will not be allowed. Now, duty-free import of mandatory spares. Now, if you import some spare parts or mandatory spares as well, which are required to be exported or supplied with the resultant product, permitted to extend 10% of CIF value of authorization. So those spares which will be, I would say, exported along with the main product or the resultant product of the manufacturing, then you can do that only if the value of those spares is 10% of the CIF value of authorization. Now, these were the schemes related to, these are the schemes which allow you to import duty-free, be it advance authorization or duty-free import authorization. All these schemes are there to give you benefit of duty-free import. Now there are certain conditions. So whenever we do apply for these schemes, or if you advise your client or business, any businessman for availing the benefit of scheme, make sure that he's ultimately exporter. Obviously, these schemes are very good, but there is an export obligation as well along that. So if you are importing outside India and you are domestically supplying those goods and the domestic market, then you will not be able to get the benefit of advance authorization. And sometimes it happens that businessman is not able to fulfill the export obligation. Then at last, when you are not able to get the export obligation certificate from the authorities, then you will have to pay the duties which were saved at the time of imports. These things to be taken care of. Now, apart from that, another scheme after that is Chapter 3 status holder scheme. Now, first, this scheme is kind of a scheme for elite, I would say elite export houses who are having a significant presence in the market. There are various stars, or I would say the categories which are divided. Now, there are few exporters who are having a lot of, who are into a lot of products and they are making a lot of export. Their export performance is very good. So obviously, Government of India will be providing some extra benefits to these kind of elite exporters. Now, what will be those benefits? So they came up with a status holder scheme. Now, if you are holding a status or of having that good export performance, then you will be allowed some benefits. Now, what are those export performances which will be allowed for this benefit under this particular chapter? Now, if you are a category, now this is a table which is specifying that to see that what category export house you are. Like if you are 1-star export house, you must be having 3 million of export in your current or previous 3 financial year. If you are 2-star export house, then 25 million, then 300 million. 4-star export house, 500 million. 5-star export house, 2000 million. Now, this is something, the eligibility to be, I would say, to fall under this one of the category. Now, what are the benefits? You get the authorization and custom clearance for both the import and export granted on self-declaration basis. You get the benefit of input-output norms, which will be fixed on priority within 60 days. Suppose you are going for fixation of ceon norms. So in 60 days, those norms will be fixed. Then there is the exemption from furnishing of bank guarantee for schemes under FTP. 2 stars and above star export houses shall be permitted to establish export warehouses as well. Now, status holders are entitled for preferential treatment and priority in handling of their consignments by the concerned agencies. So you'll get the priority or privileges related to all these things. Apart from that, if you're a status holder and you are exporting goods to a certain country in which the importer of that country is supposed to get some benefit under the preferential trading agreement. Now, what will happen under the if that particular importer wants to avail the benefit of this preferential trade agreement or free trade agreements, then this manufacturer who is in India, who is a status holder, he can sell certified those manufactured goods as stating that these goods are originating from India, which will allow the importer in other country to import either duty free as per the respective agreement. Apart from that, if you are an industrial entrepreneur, memorandum holder or industrial license holder, or if you're having letter of intent, then also you can self-certify those goods. And if you are a 3-star and above export house, then you will get the benefit of accredited client program as per the guidelines of CBEC. Now, what was this program was all about is it was as I would say it completes the benefits which are given in the status holder scheme, and that certain privileges which is there, be it like to preferential treatment of the consignments, or maybe the early release of the cargo shipments, or non-providing the bank guarantees. So these kind of programs are applicable or available to the certain export houses. Now, the last scheme of today's session would be the TMA, Transportation and Marketing Assistance for Specified Agriculture Products. Now, when this scheme was introduced in this FTP 2020, 15-20, a new chapter was formed for this scheme. Now, why this scheme was there? This was to ease the shipment of specified agriculture products. So this scheme is only focused on the agriculture products for expansion of the agriculture sector globally, and to reduce the unnecessary charges borne by the exporters for transportation of agriculture produce, to make Indian produce a proclaimed global brand. Now, India is also a very good, I would say, a lot of the majority of the population is agriculture based. So at that time, it becomes very important that we kind of globally promote this industry as well, the agriculture industry. For that, they came up with the idea of this scheme. Now, the scheme name is Transport and Marketing Assistance. Short name is TMA, for specified agriculture products. Now, what are those agriculture products, and what component like freight or marketing of that agriculture produce, which is likely to mitigate the disadvantage of higher cost of transportation of export of specified agriculture products. So when you make the exports, and if it specifically talk about the agriculture produce, so there is obviously higher cost of transportation, because you see the agriculture produces are exported in a bulk quantities. I would say they are exported in such a quantity that is not very small. Now, for that, the chapter 1 of 224 of Custom Tariff Act, except there is an exception list. They have covered the complete chapter of 1 to 24, but they have specified I would say a negative list that these items will not be allowed under the scheme if you export that agriculture produce. Apart from that, they have specified countries as well, that if you export these goods to these specified countries, then only you will be getting the benefit of TMA. Now, when this notification number 58 2015-20 was issued to enact this scheme, and this chapter was added in the FTP. Now, these are the products on which this scheme is not applicable. If we talk about chapter 1 to 5, live animals, meat and edible meat, offals, and all these rice, wheat, muslin, and cane or beet sugar, all these items on which you cannot avail the benefit of TMA. Now, only in TMA, you will be getting the benefit of the freight cost and the marketing cost. So you will not be getting the benefit of the reimbursement of these expenses if you are exporting these products. Now, apart from that, as I said, there is a specified list of countries as well. Only if you export such agriculture produce in these countries, then only you will be getting the benefit of this TMA scheme. So they have divided this eligible countries region-wise in West Africa, European Union, Gulf countries, Asian countries, or Far East, North America. So this is a complete list which extends to China as well, and South America. There are a few countries. Apart from that, third restriction is they have given a differential rate of assistance as well. Now, again, region-wise, they have come up with amount per TEU. Now, what is TEU? That is a container size. It is a 20-foot equivalent unit. It is a basically container size which, when we export goods, obviously it gets exported in the containers. This is a I would say terminology which is used for 20-foot equivalent unit. That is TEU. So if it is a normal container, then it will be 11,200 per container. If it is a refrigerated container, then the assistance will be 19,600. And if you are exporting it through air, so it will be 84 paisa per kilogram. So this is the assistance which is given country wise. So if you export to China, so there is no assistance which is given to the normal container. There is only if you export some goods which are refrigerated or which are needed to be refrigerated, then only that benefit is given. So that is also a key point to see. Now, apart from that, duration of the scheme was for 2 years initially, like from 1st March of 2019 to 30th March 2020, then another for 1 year. For 21-22, the scheme has not been notified under this chapter. Now, assistance in this scheme, there is no concept of scripts and all. They will be directly giving you the cash benefit under the scheme. And all the exporters, there is no eligibility criteria for the exporter. If you are into agriculture, eligible agricultural products, then you can go for the scheme. So there is very simple criteria under the scheme. If you see the chapter 1 to 24 and you see the annexer 1 of this scheme, in which the eligible products are, ineligible products are there. And then you see the country to whom you are exporting, and then you calculate the incentive. Apart from that, you get the TMA from regional authority of TGFT. You will be making the application of TMA, which will be, you will be doing it on a quarterly basis. For the shipments which you made in a particular quarter, you can submit an online claim within 1 year from the end of completion of that particular quarter. So if we talk about first quarter of April to June, then you can apply under the scheme within 1 year after the completion of 30th June. Physical copy is also required when you file the application online. Then you get the printout of the application, and then you can submit that same within your RA office. Now, there are certain ineligible products or ineligible supplies are also there. Suppose if products are getting exported from SEZ, EOU, EHTP, STP, FTWZ, all these units, then you cannot avail the benefit of TMA. And if your SEZ, EOU, EHTP products exported through DTA units, then also you cannot avail the benefit of this scheme. If you export of imported goods as such, suppose you are into trading, then also you are not allowed for the scheme. If you are exporting through transshipment, suppose exports are originating in third country, but only transshipped through the India, only they are passing through the India, then also you cannot avail the scheme. Items which are restricted or prohibited unless specifically notified. export products which are subject to minimum export price or export duty is there, then also this scheme benefit is not there. Where no freight is paid by an Indian exporter, if you are not paying any freight, then also you cannot avail the benefit of the scheme. And exports, if you make exports through e-commerce via overseas courier or post office, then also the scheme is not eligible. Now, apart from that, when you will be making the application, what documents are required? There is a fee of 1,000 rupees per application. There is a copy of shipping bill and airway bills will be required, and commercial invoice is required. On-board bill of lading is required if you are exporting it via sea form. Then certificate of chartered accountant is also required as per Annexure A to ANF 7A. ANF 7A is basically the main form in which the scheme will be applicable. Then you need a proof of lending as well, and a valid RCMC certificate, EBRC, airway bill if shipment is by airways, and pre-receipt. So these documents are required. Now, condition will be the TMA would be available on the shipment basis, as this is related to freight and marketing. So that component is connected with the shipment. So this is basis on the shipment basis. As you can see that the assistance is given as per the container. Apart from that, all the claims for shipment made in a particular quarter should be punched together and submitted as single application. You will be submitting a single application on a quarterly basis. And import export code is must. Obviously, if you want to avail any benefit of DGFT, you require a IEC code. Now, if anyone is having some questions, they can ask in question tab, though we will be having a detailed Q&A in our second session. So anyone can ask. I see a lot of Arman Goyalji is asking what is GNI. GNI is gross national income. And
Navjot, the questions in the question bank has been answered.
Okay, ma'am. Okay.
Yeah, they have been answered. And thank you, Rajesh sir, and thank you all the participants for your humble and kind words. These are really boosters for us also, so that we work more harder on our sessions and more harder on our topics.
Apart from that, Archana ji, I think that this, be it like FTP or the Custom Act, these are the acts which are important. I would say a good marketing should be there by the government side as well. Like you also see in a practical experience, like we have discussed a lot of assignments where exporter is unaware about even the simple re-export procedure. So, nobody is aware of these provisions, or I would say these policies which are in FTP. So, there is a very, I would say they are very lenient about the marketing part of these policies. I don't know, because their whole idea was to boost these exporters. So I think they should be conducting more sessions on these, or maybe some more clarity on the ambiguity part.
Yes, because these schemes are given for the benefit of exporters, and the best part is that whatever you are getting, most of the time either it is into your money that is being credited directly to your bank account, or at the most scripts that are easily tradable, and for which you don't have to search for a market to sell them off. So these are the incentives that are really going to impact your working capital requirement also. And in another way, I have seen that many of the exporters, as you have correctly highlighted, are not even aware of the basics of the benefits or the schemes that has been launched for them.
Right.
And what happens in the end of the day is that only selected sector of the economy or the selected players are taking the major benefit, and the basic intent of the government or the department is to penetrate these policies even to the level of MSME. That's why they have created such a broad arena for all kind of assessees that can be covered under these schemes. And yes, they want to promote these schemes to the MSMEs also, so that yes, in some or the other manner, even they are being benefited or they are being rewarded for whatever efforts they are taking to make that export happen. And even they are the contributors to your foreign currency earners in some manner, we can say.
Right. Right. Rest, I would request everyone, if anyone is having some queries, so they can attend our second session, so in which we'll be taking all the queries, which we'll be sharing on our LinkedIn page, which I have created an event for this. So you can share it with any of us, with Archana ji or me. With this, I think, wind up the session.
Yes, and thank you, Navjot, for taking us all through all the procedures and all the schemes that has been incorporated under foreign trade policy. And I hope everybody has enjoyed. And yes, I can see from the feedback that yes, people have enjoyed and they are complimenting you for your deliberation, nice deliberation, in fact, I should say. And yes, we will be sharing. I hope PPT will be shared, Navjot,
Yes,
with
yes,
all the participants,
definitely.
because yes, we
Definitely.
are working on these PPTs only for your reference, so that you can come back to these PPTs as per your convenience in future also. And so yes, with this we are signing off for the day and looking forward to see you all on our next session, that is on 20th of June at same
Yes.
time.
Yes. Okay.
Okay, take care. Have a nice weekend. Take care.